Hey everyone, I was just thinking about the unique reality each property type faces, how the pandemic impacted each in a very different way, and how each has performed in the recovery cycle. But to start, let me rewind the clock a bit. I want to put the current economic and commercial real estate trends in perspective. Think back to where we were just 2 short years ago. The pandemic was just starting. The US was hemorrhaging jobs. In the month of April alone, more than 20 million people lost their job. Companies were scrambling to transition to remote work. Store shelves were emptying. And in-person businesses like restaurants, fitness clubs, hotels, airlines, seniors housing, movie theaters, sporting venues, and many, many more had a very bleak outlook. At the same time, the government was literally injecting trillions of dollars into the economy through stimulus checks, through the Paycheck Protection Program, through loans, housing relief, and numerous other programs. Now fast forward 1 year. In May of last year, vaccines were just starting to be distributed broadly. This was the turning point. The vast majority of white-collar jobs were working remote, and all those businesses catering to in-person interaction were still on life support. And now today, a little more than 2 years after the onset of COVID, here we are. Mask mandates have ended. People are getting back on airplanes. They're starting to go back to the office. They're going shopping and to sporting events and movie theaters and to gyms. We've replaced 95% of the jobs that were lost at the onset of the pandemic, and I expect we'll get back to pre-pandemic levels this summer. Retail sales, they're 27% higher than they were before the pandemic, and savings accounts are flush with cash. They're at an all-time high. So here's my point. In just 2 years, we went from a very bleak, uncertain future to a comparatively stable, positive outlook. Yes, there's a bunch of noise about inflation, interest rates, and the possibility of a recession, but the momentum is very positive. For commercial real estate, we're in one of the most interesting phases of the cycle. Each property type faces its own unique reality and its own unique opportunities. Industrial properties were basically unscathed by the pandemic. Vacancy rates are at an all-time low, and space demand is getting a lift from increased safety inventories. Apartments, especially the ones in the urban core of major cities, softened a bit at first, then came roaring back. Apartment vacancy rates are at an all-time low. Self-storage demand also took a hit, then it surged. Vacancy rates are near an all-time low. Retail had a split reality. Weaker properties finally closed shop. Sit-down restaurants and experiential retail were hit really hard, but necessity retail like grocery stores have thrived. Overall, vacancy rates are pushing back toward pre-pandemic levels. Hotels, they took it on the chin, but they are making a strong recovery. I anticipate a very strong occupancy rate recovery this summer. Seniors housing was also hit hard, and they will continue to face a lengthy recovery cycle as the industry adapts to the new operating climate in a post-pandemic world. And finally, there's office. Office properties still face some uncertainty, but with COVID restrictions relaxing, we should begin to see strengthening space demand. Here we are, 2 years after a deadly pandemic swept the world. We're not completely out of this yet, but the momentum has shifted to the positive, and commercial real estate opportunities are plentiful for investors who keep their eyes on the horizon.